and gas production and the Trump and Biden approaches to the energy sector are Shirin Lakhani, Senior Oil Analyst at Rapidan Energy, and Glenn Schwartz, Director of Environmental and Energy Policy at Rapidan Energy. And thank you so much for joining us. Glenn, looking for just a high-level view here of the most important changes in energy policy if there is a transition in power. Help us understand that.
Yeah, absolutely. I think, when you start looking at policy changes, you have to start with the change in approach we're going to see. Climate change has been labeled Biden's top priority because he views it not just as an environmental or an energy policy, but as a jobs and a stimulus plan to really get us, help get us through this COVID economic recovery we're going to need to get through. So what you're going to see is a three-pronged approach through geopolitics. Climate's going to be a key focal point in nearly every trade deal and a linchpin of rebuilding our relationship with China. Re-regulation, blocking any outstanding Trump rollbacks and reinstating some of these Obama-era regs that haven't gotten all the way through court challenges, but also tightening those regs to further reflect, what's going to be a more urgent approach. And third, a just massive investment in clean tech, in research, and you saw that in Biden's latest climate plan, where he called for a $2 trillion investment in climate research over 4 years. Drilling down a bit towards specific policies, and I'm sure the audience will have a few more questions, but just from the outset, I think it's important to note just the bulk of the changes that he can do can be done unilaterally without Congress, either by an executive order or regulation, and that can be done rather quickly in some cases, sort of just taking back Trump-era rollbacks that haven't made all their way through legal review. So a teaser of what I would say are maybe the top three policy changes. Absolutely, federal lands. I know a lot of people have probably heard quite a bit about it. Biden has promised to block all new permits on federal lands. There's almost 3 million barrels a day of production on federal land. So any curtailment there is going to be a big deal. And it's an important distinction between blocking leases, which is definitely easy and impactful, and blocking permits, which is even more impactful, because what we're already seeing is a rush of energy producers to try to get their permits and try to hedge against the fact that those leases will be difficult to come by under Biden. Federal lands, I would say climate-related financial regulation, that doesn't get nearly as much press as a lot of these other areas. Really, it'll be crucial because this is a time where a lot of these energy companies will be trying to dig themselves out from the COVID-related demand destruction. Mm-hmm. And he'd really have an opportunity to sort of slam the door on these by using existing law to steer financial investments and loans away from the fossil fuel industry. He can appoint regulators to the Fed and the SEC, and they can require financial institutions to implement climate-related safeguards that would basically hamstring the fossil fuel industry's access to low-cost capital. He's got a few different ways he can do it. And lastly, I would just note, in infrastructure slowdown, he can and probably will slow development down to a crawl. He just has a slew of tools at his disposal to do so. And in every case, so long as he observes these procedural safeguards that are baked in, permitting approvals themselves are entirely discretionary. So the pace and outcome that he chooses to do is virtually court-proof. I'm sure a lot of people have heard about the National Environmental Policy Act. That's the procedural safeguard, and we would expect Biden to sort of wield it as a cudgel, meaning, he's going to take really lengthy, really thorough, really in-depth environmental reviews. And at least according to his climate plan, only approve infrastructure projects when you get a net reduction in climate emissions, which is a pretty high bar.
So Glenn, you talk about the procedural safeguards as well as the tools that Biden would have in his toolbox. Let's talk about the stakeholders that may have a point of view here. Has the dialogue shifted on the left with those stakeholders over the past several years? And what policies are gaining traction and being influenced by the progressives?
Yeah, absolutely. I think that's a great question, and one we've taken a deep dive into recently. I think there's maybe this general perception of Biden as a moderate Democrat, and he absolutely is, but the party has moved quite a bit to the left in the last 10 years, so that, a moderate in 2012 would be considered, at this point, quite a bit further to the right than a moderate in 2020. So, if you're looking at the policy platforms as we did from Obama to Hillary to Biden, it's easy to see where the Democrat climate change agenda has been and where it's going. And
sure. And
sorry, go ahead.
Oh, great to get that information. I just wanted to get Shireen's input on that as well. Interested to hear from you, Schreine, on this, as well as just overall implications for oil production with these changes.
Yeah, absolutely. As an oil analyst in the U.S., I think one of the most interesting things about forecasting production is kind of the need to understand the domestic energy policies that Glenn is talking about and those shifts, but also kind of the broader geopolitical dynamics at play here. So I'll kind of start big picture and kind of rein it back in at home. But I think one of the most notable policy differences on a foreign policy perspective and shifts that Glenn kind of touched on already is Iran and the U.S.'s relationship with Iran and whether the U.S. will re-enter the Iran nuclear deal or the JCPOA. So we all kind of know where President Trump currently stands when it comes to the Iran deal, and that is to exert pressure on Iran via sanctions, and that has reduced Iran's crude exports significantly. But under a potential Biden administration, we would see the U.S. very likely re-enter that deal and very quickly as well. And that means that would translate into 1.8 million barrels a day of Iranian crude barrels coming back onto the market. That's a lot of oil. That's a lot of oil to bring back onto the market in a relatively short amount of time, especially when you have demand still slowly recovering thanks to COVID. Global inventories are still trying to erase the supply overhang caused by the pandemic. And then you still have OPEC Plus cutting production to normalize the market. So from a price perspective, this particular policy shift has a significant impact on our view of prices globally, but also within the U.S. So as far as Brent prices are concerned, going back into the Iran nuclear deal would likely flatline Brent prices to about $45 through next year. If Trump is reelected, and U.S. sanctions on Iran continue, we could see Brent averaging about 48 with frequent blips up to the $50 range in the second half of next year. And some of that has to do with a bit of a geopolitical risk premium too. So, we do expect U.S.-Iran tensions to escalate as well in a Trump reelection case. So that's part of the reason for that $5 difference between a Biden administration and a Trump administration taking office next year. And then, to kind of bring it home to what does that mean for the U.S.? We do see WTI trading at a $2 discount to Brent over the long term. That's largely a function of overbuilt infrastructure in the U.S. A couple other things, but the infrastructure piece is important. So that would put our WTI forecast under a Trump reelection at about $46 on average in 2021, and under a Biden victory at $43 for next year. But here's the thing. Producers need a sustained $50 to really meaningfully grow production next year. And as you can see, neither one of our scenarios really get us there. So, we do see U.S. lower 48 crude production kind of continuing to fall this year and starting to bottom in January at about 8 million barrels a day. And under our Biden case, we see that flatlining over the course of 2021, so kind of exiting where it started. And then under a Trump case, we do see some upside picking up.
So Shirin, that's great. Now, we talk about the foreign as well as the domestic need to really understand the implications there. I want to talk a bit about the asset classes in the sector. So what is the potential outlook on the energy policy, how the shifts there? What impact could we see by asset class and sector? And Glenn, feel free to weigh in on that as well.
Yeah, for sure. And that's a good question. It's always good to kind of get deep into the granular side. So Glenn kind of mentioned this already too, but from an upstream angle, there's a long list of things that we could discuss here, but I think of greatest significance is the potential risk to federal lands for the upstream sector. Producers that have acreage on federal lands that don't have the flexibility to swap around that acreage, they'll probably feel quite a bit of heat under a Biden administration if there are initiatives to block federal leases, et cetera. And that could impact both offshore and onshore production.
I just want to get to a question that we have here because I know that we have running out of time a bit here. Question for both of you. Trump is against the Paris Accord and Biden is for going back into it. What are the benefits of rejoining versus remaining separated from the agreement? So I wanted to get in with that question.
Yeah, sure. I'm happy to jump into that. So the Paris Accord, the best thing to keep in mind with Paris is that it's really, as is the case with many international agreements, it's only as stringent as each country that signs onto it wants it to be. There's very little in the way of international enforcement mechanisms. If you don't meet your goals, it's mostly just naming and shaming. There's not a lot of, teeth to it, to say. So the benefits of Biden jumping back in, and he could basically, only it requires just submitting notice to the UN. He'll be back in 30 days afterwards, and we'd expect him to do that immediately, is really asserting the US as a leader on climate policy again on the international stage, and using that to sort of catapult us to negotiate things like trade agreements. And as climate change is becoming more and more an international problem, not just in, obviously, greenhouse gases don't respect borders, but in the sense that every policy recognizes the global nature of it. You're seeing this happen in the EU, where they're talking about a carbon border tax, and maybe, and we saw this just happen today, where the French government encouraged to put the kibosh on an LNG proposal because US LNG doesn't have methane controls in West Texas and is considered quite dirty. So, the ability to reassert ourselves on that level as serious partners in climate change would be an opportunity to talk about issues like that and create sort of a more collaborative effort on international trade deals and the like to reduce carbon.
And Shirin, this goes right back into what we were just talking about the domestic piece versus the foreign piece. What do you have to say about this type of collaboration and what it could mean for the future?
I think Glenn is spot on, and to your point, if I can just kind of broaden that or pull that thread further, that relationship between the domestic and foreign piece, you see that with OPEC as well. We had previously President Trump very vociferously, calling on OPEC to cut production, to float the market, expressing his discontent with oil prices. A Biden administration is not going to do that. We won't have that kind of third-party, non-OPEC plus person very publicly pointing fingers at OPEC to do something. So then, you layer on the Iran piece, and then you've got Libya coming back. So all of a sudden, you kind of set up this very tense atmosphere at OPEC. And when you have a U.S. administration that won't be willing to kind of step in and do something. So kind of the opposite, right, of what's going on with the Paris Agreement and the Iran nuclear deal, that also has a significant impact to oil markets.
Great information there. So to summarize this, want to get your thoughts on the overall big picture here. Expectations around Biden's energy policy have tended to focus on two likely outcomes. The first would be an Obama 2.0 energy policy that doesn't harm domestic producers. And the second, a full pivot to the Green New Deal. So Glenn and Shirin, would love to get both of your thoughts here. Is this pretty accurate in terms of possible policy, or do you see any outliers that these don't take into consideration?
I would say the truth, as it usually is somewhere in the middle. Biden is a pathological centrist. As the party moves, he looks to find where the new center is, plant himself there. But make no mistake, this is the most aggressive climate change platform we've seen from any candidate of any party in history. So, he's cognizant of where Obama was, and where he was going with policies, like trying, on his way sort of out the door. Obama tried to get sort of a backdoor cap and trade program for the power sector through the Clean Power Plan and to regulate methane on existing wells. But, Biden is cognizant not just of where he was going, but the fact that we've sort of lost time in the last 4 years in his view on addressing these issues, if not taken a few steps back. That said, we don't expect him to fully embrace the Green New Deal. His message on that has been mixed at best, but he's tried to make clear that the policy is only as stringent as he wants it to be. the host of regulatory policies on his disposal, and I'd be happy to get into them. He'll take a firm but measured approach. But for the really significant overhauls and the changes, those would have to come through Congress. And he's much more likely to lead from behind and sign what comes to his desk rather than sort of push things through. And the guide rails on how progressive the legislation is not going to come from Biden, but really from moderate Democrats, because even if the Democrats take the Senate, and in our view, if Biden wins, that they will, you're going to have a huge sort of sect of maybe 10 to 12 moderates that are going to put the guardrails on anything that's too progressive. So you'll see that in proposals for things like a carbon price or a border carbon tax adjustment, or even getting rid of the so-called Halliburton loophole, which is an exemption for fracking from the Safe Drinking Water Act.
Great. We have additional questions coming from our audience. Thank you so much for that, Glenn. So Shireen, would love to get your thoughts and for you to share views on the state of the industry in Venezuela, Brazil, and LATAM.
Yeah, sure. I think of those three, Venezuela seems to be the one that is most at risk, right? Venezuelan exports are considered, or have been for a while, very much at risk. There's a little bit of a nuance coming up there with the end of U.S. crude swap waivers. So, the U.S. has been rather frustrated with its inability to push out Maduro and to stop this kind of burgeoning cooperation between Iran and Venezuela, who are both sanctioned by the U.S. So the U.S. is planning to take away the waivers that were allowing crude for diesel swaps. So that will put a bit of pressure on Venezuelan exports towards the end of this year. However, given that, you still have investments from China and Russia that do kind of put a floor, or I guess, yes, put a floor on Venezuelan production at about 500,000 barrels a day. So we do see that kind of coming up again in 2021, but really flatlining and not really seeing a lot of upside there.
Great. So to circle back a bit on what we're talking about earlier, having to do with asset class and sectors, let's talk about the risk of pipelines in the context of what we're seeing happening now, what could possibly happen in the future.
Yeah, absolutely, and I think that's a really hot topic. So especially with I think the midstream sector doesn't often get as much attention as the upstream sector when we're thinking about U.S. oil and gas. But from when we look at the election angle, I think there is quite a bit of risk to these, especially to pipeline assets. And Glenn kind of touched on this earlier too. So we could see requirements for more thorough and therefore more lengthy climate reviews on pipelines that could put a strain on permitting. We could see the Biden administration, denying permits for controversial projects like Keystone XL, right? That one's been a hot topic for over a decade now. And then, finally, and Glenn mentioned this too, repealing the Halliburton loophole, that could also, increase the cost to fracture a well by at least 3 to 5%. It's certainly more than that, and any impact on the upstream side certainly has an impact on the midstream and downstream angle as well. So I think those are kind of the top lines on the infrastructure side, though.
Wow, great discussion. Started off talking about traders expecting slower demand recovery, or slower recovery in terms of demand. Traders hedging their positions in the case of volatility, as we've seen before. Also talking about the possible Biden plan. Jobs and energy and climate policy are all intertwined. So very interesting concept there. The massive investment that Biden is talking about with clean technology and research, which would be a move away from Trump administration and where things currently stand. And also the importance of understanding the procedural safeguards that the leader would have to be mindful of, understanding the tools that they have to work with, and also understanding the other stakeholders at play. We talked a bit about the progressives and how that group might have an impact. Also important to understand broader issues around foreign and domestic policy when really thinking through what the future would look like. Examples of that, the US-Iran relationship, as well as collaboration around the Paris Agreement. And it's really important to think about the effects of related sectors and the knock-on effects that you would see there. Thank you so much for joining us, Glenn and Shireen.
Thank you.
A special thanks to our viewers for joining us today. And as always, feel free to reach out to us on LinkedIn, Twitter, and our YouTube with your comments and even your questions that you would like, sir. I'm Keesa Schreane. We'll see you next week. Be well.